The last day of the month dawns Warband, and it dawns split clean down the middle. One market closed last night at a record high. The other cannot climb off the floor. Same calendar, same money, opposite directions. And the canyon between them is the whole story this morning. This is Tuesday, June 30th, 2026. Start with the hard money, because it wears the bruises. As of just past 5 o'clock Eastern, Bitcoin trades at 59,300, soft again, pinned under the 60,000 line it has defended all month. Step back, and the damage is the headline. This is the last morning of June, and June was brutal. The coin down roughly 18% on the month, better than half below its October record. The fear and greed gauge buried at 12. Extreme fear. And the funds bled to match. June will close as the worst month for Bitcoin exchange-traded fund outflows since they first launched, better than $4 billion pooled. BlackRock's fund the worst hit, 8 straight days of redemptions running into the close. Now the other wall of the canyon. While the coin bled, the stock market threw a parade. Monday the Dow closed at a fresh record. The Nasdaq ripped better than 2%. The broad market punched to an all-time high. Tesla leapt better than 8% to 409. And mark one detail like a rune. Alphabet, Google, was just added to the Dow, knocking a legacy phone company out of the index, and jumped 5% on its first day inside it. The machine intelligence names are now literally replacing the old economy inside the benchmark itself, and the engine kept the discipline honest. At Monday's closing bell, the InvestAnswers Decision Support System flipped Bitcoin's trend bullish, and by the stroke of midnight Eastern, it cut it straight back to bearish, green for 8 hours, then dead. The third failed green flip this month. Hear it plainly. The turn is not confirmed. Not yet. So why the canyon? Why does the loud money make records while the hard money makes lows? The answer sits in one chair. The Federal Reserve. Under its new chairman, it has held rates firm through every meeting this year and hardened its voice, and the market that begged all spring for cheaper money now braces for the opposite, a hike on the table before a cut. Money that is not getting cheaper does not chase the asset with no yield and no committee to defend it. So, the borrowed money pulled out of the Bitcoin funds and piled into the one trade with a story loud enough to chase, artificial intelligence. And that crowd just made new highs. Here is where it turns, because the sharpest macro mind in our corner published straight into this moment. This week, Jordi Visser at 22V dropped a new paper. He titled it Running Hot into Scarcity, and it inverts the whole picture. His argument, the artificial intelligence boom everyone is buying is not pure abundance. It is manufacturing brand new scarcities. In power, in compute, in copper, in the raw materials, the build-out devours faster than the world can dig them out of the ground. The flood of capital into the abundance trade is digging the moat around the scarce things. And on Bitcoin, he is blunt. The coin is pressing its 200-day line at the very moment real yields have gone negative. Cash and bonds quietly losing ground to inflation, a pairing he calls, on his own data, going back to the start, one of the best moments in history to own it. Every dollar Bitcoin has ever returned came while inflation ran hotter than the Fed's rate. That is precisely the box we stand in now. Sit with the second order, Warband. The thing that looks like Bitcoin losing is the thing loading the spring. The abundance melt-up is not the rebuttal to hard money. It is the fuel. The cash in your fist quietly rots while the scarce thing waits. Still beats parchment. Now into the engine room of that abundance trade, because the loudest builder alive just moved a piece on the board. Over the weekend, Elon Musk announced that XI's newest model, Grok 4.5, entered private testing, and where he sent it first tells you everything. Not to the public, not to a leaderboard. Straight into SpaceX and Tesla. His own companies, his own engineers, running the frontier model inside the empire before anyone outside it gets a look. Musk claims this build runs close to, and maybe past, the best model his rivals ship. Mark that as his claim. No outside lab has confirmed it, and the boldest builder on Earth is also its boldest salesman. Demand the proof before you bank the boast, but the structure beneath the boast is the real signal, and it is pure first principles. One man now owns the model, the cars it will drive, the rockets it will fly, the satellites it rides, and the compute that trains it, and he is wiring them into a single loop. The brain is forged at XAI, hardened inside Tesla and SpaceX, fed back sharper. He even claims his shop will train a fresh model from scratch every month through the end of the year, a cadence no one can yet confirm, but a declaration of intent that should make every rival sweat. And remember what the last story told you. That machine runs on power and silicon and copper. The harder Musk drives it, the more he proves Visser's case for him. The abundance build is the scarcity bid. One more front, and it closes a loop I opened 2 mornings ago. I walked you through strategy, Michael Saylor's Bitcoin treasury, under genuine siege, its variable rate preferred beaten below par, and I laid out what a true death spiral would actually require. Monday, the machine answered. Strategy filed a new capital framework and did 3 things in one stroke. It lifted the coupon on that preferred by 50 basis points to 12%, effective tomorrow. The textbook move to defend a preferred trading under its par value, exactly the par defense I told you was coming. It disclosed a war chest, $2.5 billion in cash reserve, built up, not bled down, enough to cover every dividend ahead, and it wrote down the rules for selling Bitcoin if it ever must. Capped hard at under 2.5% of its 840,000 coin hoard. That is a liquidity valve, not a liquidation. A pressure release, not a fire sale. The market read it the same way. The stock leapt better than 10% on the day into the low 90s, and at the closing bell, the engine threw it a full confluence buy. The strongest signal in the kit. The siege is real, so is the answer. And hear me clean on the spiral, because the headlines will get this backwards. One coupon reset is not condition 1. A single 50 basis point tick is par defense doing exactly its job. Proof the flywheel still spins, not the spiral catching. Condition 1 needs the coupon climbing across several resets in a row, accelerating. The clock only starts if July and August both tick higher too, and the gauge that would truly matter, a draining reserve, just ran the other way, fattening, not bleeding. Saylor is not broken. He is digging in. So here is the last morning of June. The loud money closed at a record, and the hard money closed near its lows. But read the two as one, the way the patient hand does. The very boom lifting those indices is the same boom devouring the power and the metal and the compute, and that is the case for the scarce thing, not against it. The signal will not bless the turn yet. 3 green flips have died this month, and you do not chase a candle the engine keeps killing. You stack into the fear with a steady hand, and you let the month close where it closes. June ends in fear. The thesis does not end with June. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Hold the line.